I think gold and silver, after a very long wait of years for silver, particularly gold's broken out and has tried to get to new highs several times in the last couple of years, but silver's way behind its all-time highs. It took a long time to get here, but I think gold and silver have begun big moves. I continue to say we'll see gold up at 3,000 this year, and I think that's conservative. I think, or I say pre-bust. So if the bust gets extended into the first quarter, then it might take a little longer. But pre-bust, I think 3,000 on gold is a conservative number. Silver, I have raised my target from 60 to 75, and that's a long ways away. I mean, we're down around 29 or thereabouts, 30. So it's much more than double. And the miners that go along with that, I think will get all the benefits of big moves in the metal prices. So I'm very bullish on both of the precious metals for sure.
Now, obviously, $75 silver is very far away. You're looking for that, though, by the end of the year?
It could happen this year, or it could spill into the first quarter. I think it's pretty much, it's a pre-bust number. So it kind of, again, you're right. It's from here, say from 30 to 75 is a huge move. So I don't think it happens in 3 months. But, if you get this thing going, silver has a history of once it becomes very clear that it's in a big bull move, it can cover a lot of ground in a hurry. So I would say certainly first quarter next year is a real possibility. It could, if things really get going here, it could happen before the end of the year. And if not all of it, certainly a lot of it, I think, does occur here in the next 5 months.
Yeah, I mean, it just takes looking back at a chart of silver to 2011 and seeing that it was just a couple months from when silver was $30 to when it almost touched 50 there. So it can move pretty rapidly.
Yeah, and that's kind of the look I see in it again. And again, if you go back even more recently to 2020, you had a move from, say, April, May to August that was pretty fast and steep. So, yeah, that's its history. And in the bull market for the metals, silver does outpace gold almost always. So, on the way down, gold holds up better. Silver gets hit harder. On the way up, silver has a catch up. And I don't know where the silver silver ratio is right now. It was up over 90, I think, but I think you could see that down to somewhere near 40 or 45 in this move. So silver definitely looks like it's going to outpace gold, and gold's going to do pretty well itself. So,
and your outlook for the miners in this melt up, obviously we've seen underperformance in the miners overall. Do you see that the miners will catch up?
Definitely. I think it's been frustrating for investors, because the metals woke up before the miners have, and then the miners look like they're starting to go, and then they, have corrections again. I think it is a frustrating trade, but I think there's a lot to be bullish about going forward. I think this most recent consolidation is just about done, and I think from here you see some pretty fast moves.
And back to the general stock market, what are some of your price points you're looking for? And if obviously we can't give financial advice, but I know you've said before that right now seems to be kind of a high risk situation, if you can correct me if I'm wrong, but your perspective on kind of the risk reward ratio in the stock market right now.
Yeah, what I have said, it's very tricky right now because you would say if I'm right, we're within a few months of a top. So, you can never pinpoint a top. So if we're at the end of a 42-year run, then you're clearly in the risk period, in a period where it could reverse at any time, right? However, given the unusual period we're in and the fact that I expect the parabolic from here into the top, you've got potentially, 25 to 50% type upside from here, even if it does cover it in, a few months. that sounds crazy, I know, but it's what we're seeing because you're coming to the end of a very long cycle. That, as I said, look at Netflix if you want to see a picture of something that this can look like. Um, so it makes it a kind of a difficult situation because normally the advice would be, don't think you're so smart that you can call the top. So, if you're within a few months of a top, maybe you want to get defensive. And for those that are really risk averse, maybe go, get out of the market or what have you. However, because we have potential to get returns that would normally take you 3 or 4 years to get. I mean, if you're talking about 40 or 50% returns, that's 3 or 4 years worth of returns. If you get out prematurely here, and that occurs, chances are you're going to get dragged back in. You're going to get pulled back in by your, investor psychology, by the fact that you feel you're missing something. And I can promise you at the top, you're going to have all these people who are skeptical of this market now are going to be telling you, oh, this thing has a long ways to run. There's a lot, the Fed's easing now. This thing will go for 25 and 26 and 2026 and beyond. So you're going to be caught if you got out now, you're going to be caught, let's say 3 months from now saying, oh, I missed a lot. I better get back. I can't afford to just sit here and watch it go. So then you do get in at the top. So I just caution people. Everybody has to kind of make their own decisions based on their own, how risk averse they are and how cute they want to play this. But it is a very tricky equation because of that fact that, yes, time-wise we're close, but distance-wise we may still be quite a ways away from the top. And again, I'm out there with my targets are beyond anybody else by a long shot. So I'm not giving you consensus view. If you listen to most people, they'd be telling you you're pretty close to a top, if not at a top. And I'm not saying I can't be wrong. I'm one person with a view, but my read of things, I'm pretty confident, pretty high convicted that we have, my target on the S&P is 7,000. And I raised my target on the NASDAQ from 23 to 24,000. And that's a NASDAQ composite, not NDX, not NASDAQ 100. So the composite is, 24,000, which is, I don't know what the number is now, but probably, over 30% away. I'm at, on the Dow, my target is 55,000. And on the Russell 2000, my target is 3,300. And again, from here, that's a long distance away. You're at 2,200 or thereabouts. So you've got a good long ways to go. That's 1,100 points, or basically 50%. And we had a correction. We had a big jump in the Russell last week, or I can't remember. Yeah, it was last week, I guess, the week before. And then it corrected towards the end of last week and early this week. And people are going, that was an aberration. It's not going to. I think we're coming out of that correction already. The Russell's been way behind the other indexes through this bull market of the last 18, 19 months, 20 months. It's going to have a big catch up here, I think. And it's driven, in large part, it's driven by the fact that if the Fed starts easing instead of tightening, that benefits small cap stocks. It benefits financials, which are a big part of the Russell, benefits cyclicals, which are a part of the Russell. So I do think you've got a broadening out of the market ahead, so that it will go from this idea that it was only 7 stocks or it was a very narrow tech-driven rally to one that becomes pretty broad-based with value playing, with small caps and large caps both playing, with tech's getting, got beat up recently, but I think tech will come back and make major new highs, including semiconductors. So it's going to be kind of a much healthier market where it's much broader. And that's part of why I think people will become convinced that, hey, this thing has legs, even though I don't think it necessarily does.